Saving more has long, of course, been a top financial resolution for the new year for millions of families. Yet some Americans may try to reach that goal a little bit differently this year. CNBC senior personal finance correspondent Sharon Epperson joining us now with more. Sharon.
Well, Brian, about 40% of people say they'll be in financial survival mode this year, focused on just dealing with day-to-day money matters, according to Fidelity. But many workers are also trying to figure out the best ways to keep putting money away and maximize their retirement savings. 31-year-old Angel Trin works in cybersecurity. Her main focus this year, her own economic security.
My top goals for 2021 is to actually be better about investing.
She's saving as much as she can in her retirement accounts now so that she's well prepared later.
I have to play catch up. Now, after I paid off all my student loan debt, I can now max out my investments.
The maximum you can contribute to an IRA this year is $6,000. You can put away up to $19,500 in your 401k. If you're 50 or older, you can add catch-up contributions to both. An additional $1,000 for an IRA and an extra $6,500 in a 401k. Trin's retirement savings are mostly in target date funds, which automatically rebalance from stocks to bonds as you get closer to your retirement date. This year, she wants to start investing on her own.
It's definitely one of my resolutions. Of course, investing is risky, but at the same time, like the bigger the risk, the bigger the return.
Financial advisor Roger Ma, author of Work Your Money, Not Your Life, says focus on what you can control in the investment landscape.
What you're invested in, how much you pay to invest, and where you put each of those investments, what type of accounts you use.
Then build on what you already own. Advice Trin hopes will help her with her ultimate goal.
I want to retire with a lot of money and be financially free.
Roger Ma says one way to become a more independent investor is to buy funds that often make up a target date fund, a U.S. stock index fund, international stock index fund, and a U.S. bond fund. Buying those investments on your own may give you a better handle on investing while still making sure your retirement accounts are well diversified. Brian?
All right, Sharon, not letting you go just yet. Got a question. Okay, if people have, asking for a friend, if people have more money that they can put away beyond 401ks and IRAs, the two most well-known, are there any other tax-advantaged ways to save, given that certain taxes may be on the rise?
Well, this is a good one that people need to look out for. If you have a high deductible health plan, you should definitely look into setting up a health savings account. It gives you triple tax savings. You put in those contributions tax-free, the money grows tax deferred, and then you take the money out in retirement tax-free. And you have to use it for medical expenses or healthcare expenses, but keep in mind, those are often the most expensive, the highest expenses that many retirees have. So that's a great way to save for retirement. You can pay for medical expenses now with the money if you need to, but if you don't need to, you can just invest that, and then you'll have that money to pay for expenses in retirement for your medical care.
Shepard Smith here. Thanks for watching CNBC on YouTube.